Welcome back to this Moneycontrol live stream. I am Nandita Khemka and we are putting the focus on the MPC policy decision that will be coming out tomorrow. The RBI's or the MPC's 3-day policy meeting is underway and we are expecting a decision tomorrow at 10 a.m. Counting down to that, but what should one really expect? This time around, the policy is very, very important given the fact that there are quite a few moving parts, quite a few factors at play and conflicting signals really. So what should one really expect? Let's bring on board Latha, Venkatesh of CNBC TV 18 as always to put things into perspective, and this time things are really complicated, Latha ma'am. We have a strong GDP, 6-quarter high, and we have record low inflation, but all these factors aside, we have Rupee that has taken a very sharp plunge. 90 has been crossed. So in all this, what do you expect the RBI to really do?
Well, you're right that at the moment, things can go either ways. I can tell you from CNBC TV 18's point of view itself, I do something called a citizens MPC, where people it's a shadow MPC. They voted 3-2 in favor of a status quo, no rate cut. 3-2.
3-2.
So it's a very narrow vote. And Ritu does a poll of many more economists and bankers. That poll gave 60-40 in favor of a cut. But again, 60-40, it's narrow. So clearly it's like how the market is, it could go either ways. And no one is any the wiser. And the arguments are the same. If you look at the inflation, that number came first. On November 12th, everyone betted that a rate cut is a given, but it's 0.25%. Come 28th, everyone betted like, oh my God, now will they cut? See, the governor gave an interview to one of the television channels, very, very clearly said, yes, I did say that there is space to support growth. Now look at the choice of words. I said there is space to support growth, but is there a need to use that space? That argument can always come that I want to preserve the ammunition for a rainy day. He could say that, especially because financial stability can be threatened when there is to and fro on the trade deal. So though everybody says the governor gave it away by that interview, but I don't think, if you look at his words, he says there is space to support growth. Exactly what he said in the October 1st interview, October 1st monetary policy. So my sense is the governor has not given away anything and he can still come around and say on 5th December that yes, there is space to support growth and we will use it when we think it is needed. Today it may not be the best day. It can come later, but there is another section which equally and more strongly feels that if you don't do it with a 0.25% inflation behind you, you're going to look foolish when you do it when there's 3% behind you.
That's
so, I give full credit to both sides and if I have to vote, I will be totally confused.
Okay, totally confused. If you say that, then I can imagine what market participants must be really guessing right now. But talk about the rupee, because that will be a big factor. And usually the RBI governor doesn't really mention a lot of rupee in his policy statement or even the press conference. But this time around, the day the MPC meeting started, we touched 90. Do you think that would play or that would make a difference and the governor will obviously make some statements?
In the past, the governor has once, when there was big wobble in the market, he came and read out a prepared text that they always do. On the rupee, there is nothing extempore. The practiced statement is we have no market level and we allow for volatility. We smooth out volatility when we intervene. And he might say, repeat that statement, or he may come with a prepared text saying that the macros of the economy don't warrant, the instability that we have seen in the currency. Something very strong is quite possible. Or he may, like, what the CEA said, that it doesn't give me sleepless nights. The Reserve Bank has adopted a more hands-off approach. So my sense is that he will make a statement because all journalists in the press conference are going to ask that question. It will not come once, it will come in various ways. So my sense is the first time the question is asked, he'll say, I know all of you have that question and here's my prepared text. So he will make a statement. Of that there is no doubt. But I must also add that today what I hear is that the rupee is finding natural support at 90-40. RBI's intervention is there, but it is not the factor which is keeping the rupee somewhat ranged today.
I got it. So, again coming to the point of a rate cut, we've already discussed this in the past that nominal GDP is still, it's in single digits, and there's a deflator factor that is making the real GDP look more better or strong. So in that sense, should India Inc. also wants a rate cut, right? So doesn't this argument really cut ice that inflation is low and the RBI's primary mandate is to rein in inflation that's been reined in? So, to revive animal spirits, perhaps 125 basis points.
I would assume more people are of your point of view in the market. That, your mandate is 2 to 4%, 2 to 6%,
yeah.
4% plus or minus 2. And for about 4-5 months of this year, it is below 2. You're breaking your mandate. You're violating the mandate. And therefore, on this issue, you have no two thoughts. You have to cut. But, that argument is very strong. And everyone knows that 8.7 is a weak nominal GDP.
Yeah.
The real GDP is made to look a little better. It's strong. Even without the deflator help, it would be above 7%.
Yeah.
Which is a growth to kill for. It's
exactly.
a very good number. So it's not that it is weak, but it is not an 8.2% growth. And it is possible that we are going to see 6% handles in the quarters to come because we had a very positive base effect.
Yeah.
Year ago, there was no capex spend because of the elections.
Yeah.
This year, the second quarter saw massive 40% higher capex spend than year ago. Exports were front loaded. So a lot of things went in favor of growth in the first half. We may reach 6% and thereabouts in the coming quarters. And the governor can make a superb case that therefore a 0.25% will actually help that growth, growth along. The point is, how much good will it do? If you ask in the market, the bond markets won't move. Because at the end of a rate cutting cycle, they anyway don't. Markets move in anticipation. This is the last cut, there's nothing more to move. Bonds will not give you any help. Will the banks pass it on? They have to. External benchmark linked loans will come down. But banks are dragging their feet. They've already renegotiated with many borrowers and linked it to MCLR and stuff like that. So the incremental good will not be much. But I mean, who is to say? There is every reason to use that space.
Okay, so this time I think it really becomes complicated and we really have to watch out for what the governor really does. But in terms of growth forecast, it's something that is customary, right? And now that we have seen 2 quarters of very good growth, doing the math, just by doing the math, of course, it does warrant an upward revision. But the question is how much? By how
much? He has to say a 7 handle for growth. There is no way you can get away from it. Because the arithmetic, if you're 8% in the first half, I mean, are you going to be less than 6% in the second and third quarter, in the third and fourth quarter? Even if you are like, a little over 6, your average is going to be above 7. It is arithmetic. It has to be 7 point something.
Okay.
So whether it be 7.2 or 7.5, I think the market, there are many people pushing for 7.8. That's the upper end. And then there are people at 7.3. My sense is the governor will be around 7.4.
Okay.
But that is still a good 60-70 basis points, 40-50 basis points over the previous reading.
That's true.
And he has to lower inflation. They are standing at 2.6. The market is averaging at 2, with some people at 1.9.
Okay.
My sense is he'll come to 2. There's no taking away from that.
All right. So that's about growth and inflation. Very important, the messaging. We talk about dovish, not dovish, hawkish, whatever. But this time around, what would be the market be watching out for in terms of commentary? I think that will be important.
Yeah, that will be important. I think he will try to sound dovish. Not that he's giving another cut. He may say that we are at the end of the road as far as rate cuts are concerned, but Reserve Bank stands ready to help banks in any way. We are conscious of supporting growth or something. I think, as you say, communication will be the most important. That, we may be at the end of the rate cutting cycle. He'll have to acknowledge that. But he may say positive things in terms of Reserve Bank standing ready with liquidity.
That was my next question. Markets anticipating OMOs?
I think your last question for the bond market is the first question. Because the rate cut is not going to be transmitted by the bond market. They're all eyes and ears are for what the governor says about liquidity. It is usually not a statement in the policy statement.
Post
policy statement in the presser. I mean, if I get a chance, my first question will be, sir, how much OMOs are you going to do? Which is open market purchase of bonds. When you purchase, you put liquidity in the system. And you have to put that liquidity because you have supplied so many dollars. You have supplied something like $100 billion or maybe $80 billion. Now you multiply that by 80 rupees or 85 rupees. They have pulled out something like 2 lakh crore from the market. you have to replenish that. They have been doing it whenever they're able to buy. But this year, they have not had the chance to buy dollars. All the time, they're selling. So my sense is that they will have to replenish it. And the market will be very happy if he says 2 trillion rupees, 2 lakh crore, he gives a number. He may not do that. But there is a sure shot question in the press conference. Are you going to do an OMO? How are you going to provide liquidity and how much? And he will answer without giving away the numbers, is my sense. He's not going to say 2 lakh crore. But he will say that we are conscious that liquidity support is needed or some, I mean, in his own wisdom, he'll put that. The thing to watch from the market is your last two very important questions. How much liquidity will he provide? What is the communication?
And very last question then, so aside of the OMOs, what else will the market really be watching out for? Because I think till now stock market participants were, hoping for a rate cut. If that doesn't come by, will the equity markets be disappointed? Or given the rupee sharp fall, they must have already anticipated ki chalo, since a rate cut could put more pressure on the rupee.
Perhaps lately it is the banking stocks that supported the market. You remember yesterday and all that we had some support from IT stocks because, and it was the next big move was in the bank nifty. So the market is not penciling in too much negativity because of rate cut. The banks, see, 100 basis point rate cut you managed, and in the last Q2 results, HDFC's margins were down by 7 basis, ICICI's by 4 basis. SBI reported higher margins, higher by 4 basis. So they've all managed their transition very well. When you've seen through 100, how much will 25 basis hurt? So I don't think the banks will lose big time. If there is a cut, then you should expect real estate and autos to do well. But for the stock market, what I am wondering is what more will he do for banking sector efficiency? He has come with a bunch of issues which would have been the talking point had not Rupee and his AI distracted us. Relieving them of the ECB rules, then reducing the weights for
banks, the big banks, ICICI and HDFC Bank.
Even for NBFC, for loans to NBFC. And NBFC's risk weights have been reduced. So he has done a lot in terms of helping banks and allowing banks to finance acquisitions.
Last policy was all about banking reforms, right?
So there could be, I don't know, nobody foresaw the banking sector liberalizations that he announced. Maybe there is more up their sleeve which we don't know.
So that's what I was going to ask, if there could be any surprises on that front as well.
Oh really? I didn't outguess them last time. I don't think I have the capacity to outguess them this time. But considering that they are out to make banking sector more efficient, because asset book is clean, the country is on the takeoff on growth. This is a good time to make banks more business-like and not handmaidens of the government trying to do fiscal jobs like Jan Dhan and all that. Now become really business-like. It could be that there are a lot of inefficiencies in the system which he will correct, which I don't know of. That only a veteran banker will be able to say what can be corrected. But I wouldn't be surprised if he did that.
Okay. Now, I won't be keeping you longer than this. I have a lot more questions up my sleeve, but we'll save it for another day, Latha. But thanks a lot for putting things into perspective, and I hope to once again catch up with you tomorrow if possible, and we can decode
from the RBI.
We could decode some of those announcements as well. But with that, it's a wrap on this Money Control live stream. Thanks a lot for tuning in. I'll see you at 3 p.m. with closing bell. Do tune in for that as well. Thank you for watching.